China just moved $8 trillion. $8 trillion. That's more than the entire economy of Germany, more than Japan, more than the GDP of every country in Africa combined. And they moved it in a way that will destroy Western markets. Not might destroy, will destroy. Here's what makes this absolutely terrifying. This exact move has happened 3 times in recorded history. Same pattern, same sequence, same devastating outcome. Every single time, without exception, without mercy. In the last 24 months, China has quietly restructured $8 trillion of foreign assets, currency reserves, and trade agreements in a coordinated strategy that only makes sense if they're preparing for total economic war. The West thinks this is normal financial maneuvering. Just China being China, just another headline that doesn't matter. They're catastrophically wrong. Because there's a 4-stage pattern that plays out every time a rising power challenges an established empire economically. It's played out for centuries across continents, across different civilizations, and we're not at stage 1 anymore. We're not at stage 2. We're deep into stage 3, the point where the collision becomes mathematically inevitable. By the end of this video, you'll see exactly what's happening. You'll understand why every Western investor who doesn't see this pattern is about to lose everything. And you'll know exactly when it's coming. Let me show you the pattern. The one they don't teach in economics classes. The one that's been erased from history books because it's too dangerous. 4 stages. Always the same sequence, always the same ending. Stage 1 is the foundation of dual dependency. This is where 2 economic powers become intertwined, where trade flows become massive, where each side believes they need the other, where economists write papers about how interconnected the world has become, how war is impossible because of economic ties. Money flows freely, goods move constantly, both sides get rich, politicians give speeches about partnership and cooperation. Everyone's happy. Everyone thinks it's permanent. It never is. Stage 2 is the asymmetric accumulation. One side starts accumulating strategic advantages while the other side grows complacent. Surplus nations build massive reserves. Deficit nations build massive debt. Power shifts quietly, slowly, almost invisibly. The rising power is saving, building, preparing. The dominant power is spending, borrowing, assuming until suddenly it's obvious. Until suddenly the power has already shifted. Until suddenly it's too late to reverse. Stage 3 is the strategic repositioning. The rising power realizes they've accumulated enough leverage. They start restructuring, diversifying, building alternatives, preparing for separation. They do this quietly, without announcements, without press conferences, without warning, while maintaining the appearance of cooperation, while smiling at diplomatic meetings, while signing trade agreements. Behind the scenes, they're preparing for war. Not military war, something worse, economic war. This is where we are right now. And most people don't even know it. Stage 4 is the controlled demolition. The rising power triggers the collapse deliberately, not accidentally, not as a side effect, deliberately. They weaponize the dependency they spent decades building. They use economic force to achieve political objectives. They destroy without firing a single shot. The established empire can't respond. They're trapped by their own debt, their own consumers, their own system, their own arrogance. They collapse. Not militarily, economically, which is worse, much worse, because you can't fight back. You can only watch. You can only suffer. This pattern has played out 3 times in modern history. Same sequence, same stages, same outcome. Let me show you and pay attention because the details matter, the timing matters, the sequence matters. England and Germany, 1900 to 1914. England was the global superpower. The British Empire controlled a quarter of the planet. The pound sterling was the world's reserve currency. Every major trade happened in pounds. London was the center of global finance. Britain seemed invincible, permanent, eternal. Germany was rising fast, industrializing rapidly, building manufacturing capacity that rivaled Britain's, accumulating wealth, growing stronger every year, stage 1 locked in, both countries trading heavily, massive commercial ties, both getting incredibly rich. The economic relationship seemed permanent, beneficial, unbreakable. British newspapers wrote about the age of eternal peace through commerce. Politicians gave speeches about how economic ties made war impossible. They were wrong, catastrophically wrong. Then Germany made a strategic decision between 1900 and 1910. They restructured their entire foreign reserve strategy. They reduced British pound holdings by 60%. 60%. That's not a minor adjustment. That's a fundamental repositioning. They accumulated gold instead. Thousands of tons. Building the largest gold reserve in continental Europe. They built trade relationships with Russia, Austria, Hungary, the Ottoman Empire, creating an alternative economic sphere, an alternative system, a parallel structure. The British didn't notice. They were too confident, too comfortable, too arrogant to see the pattern. Stage 2 confirmed. Asymmetric accumulation in full effect, power shifting beneath the surface. By 1912, things got darker. German bankers were openly discussing financial warfare in private meetings, how to weaponize gold flows, how to trigger bank runs in London, how to collapse sterling without firing a shot. We have the documents, the minutes from banking conferences in Berlin, the private correspondence between German financial officials, the strategy papers from the Imperial Treasury. They were planning economic war 2 years before military war started. 2 years of preparation, 2 years of positioning, 2 years of building the weapon, stage 3 verified, strategic repositioning complete. The trap was set. August 1914, World War I begins. Everyone focuses on the military aspect, the trenches, the battles, the soldiers. They miss what happened financially. Germany immediately froze British assets in German banks. Recall gold from London triggered a massive liquidity crisis. The Bank of England nearly collapsed in the first week of the war. Not from bombs, not from military defeat, from bank runs, from financial contagion, from the weapon Germany had been building for years. Britain had to suspend gold convertibility just to survive. Had to beg the United States for emergency loans. Had to abandon the very system that made them a superpower. Their economic dominance shattered overnight. The pound never recovered its position. Within 30 years, the dollar replaced it as the world's reserve currency. Stage 4 delivered. The pattern completed exactly as designed, exactly as planned. Now, watch the same pattern on a bigger scale. Same sequence, same stages, different players. America and Japan, 1950 to 1990. Post-World War II, America rebuilt Japan, made them a trading partner, an economic ally. The relationship seemed perfect, mutually beneficial, a model for global cooperation. America got cheap manufactured goods, electronics, cars, textiles. Japan got access to American consumers and American capital. Both sides prospered enormously. Stage 1 established, deep interdependence, massive trade flows, mutual benefit, everyone winning. But starting in 1960, something changed. Subtle at first, almost invisible. Japan began accumulating dollars. Not just earning them through trade, accumulating them. Massive amounts. By 1985, Japan held over $300 billion in U.S. currency reserves and treasury bonds. $300 billion. That's an enormous amount of leverage. But they weren't stopping there. Japanese companies bought American real estate. Rockefeller Center in New York, Pebble Beach Golf Course in California, Columbia Pictures, American Icons. Americans thought it was just investment, just rich Japanese businessmen buying trophy properties. It wasn't investment, it was positioning. It was converting dollar reserves into hard assets. It was preparation. Stage 2 confirmed. Asymmetric accumulation reaching critical mass, the power balance shifting invisibly. Then in 1985, something remarkable happened. The Plaza Accord. On the surface, it looked like cooperation. America, Japan, Germany, France, and Britain agreeing to coordinate currency policy, to manage exchange rates, to maintain stability. That's what the press releases said. That's what the politicians claimed. The reality was different. Japan forced America to devalue the dollar, used their leverage, their accumulated reserves, their economic power to reshape global currency markets in their favor. This wasn't cooperation. This was a demonstration of power, a warning shot. By 1987, Japan was openly preparing for a post-American economic order, building Asian trade networks, creating yen-based settlement systems, talking about replacing the dollar as Asia's reserve currency. Stage 3 in motion, strategic repositioning underway. the weapon being built. Then came October 1987, Black Monday, the worst single-day stock market crash in history at that time. The Dow Jones dropped 22.6% in one day. One day, over $1 trillion in market value evaporated, vanished, gone. Was it random market panic? Irrational behavior? No. It was triggered by coordinated selling from Japanese institutions, massive liquidation of American assets, converting to yen and gold all at once. All coordinated. They tried to collapse the American financial system, and they nearly succeeded. Banks failed. Brokerages collapsed. The entire system teetered on the edge of complete breakdown. America survived barely, only because the Federal Reserve intervened with unprecedented liquidity injections. Only because they printed money faster than the crisis could spread. But the message was clear, crystal clear, undeniable. Japan had the power to destroy American markets whenever they chose.